Hey everyone, Douglas here, Cannon Market Analysis, doing another quick update for this evening, trying to keep to that promise of getting something up about every week or so here on the YouTube channel. And I am working on and have been working on a little Elliott Wave kind of tutorial, if you will, and I'm piecing together, but taking a little more time than I thought. So like I said, I just want to at least get some sort of update posted. So let's see, what I want to talk about tonight is that massive rally we saw today in equities. So I'm recording this about 11 p.m. June 4th, and it really looks like today was a big reversal, and that reversal is underway, and that is very much what I was expecting to occur very soon. In fact, yesterday, June 3rd, I doubled down on my long position in the S&P 500, and as always, I post those over on my Patreon page for my patrons. And what I decided to do is I've gone ahead and made that post public. So if you head on over there, head on over to the site, patreon.com/CannonMA, you can see just that. You can see the post. And to be clear, I'm not an overly active trader by any means. I might make about 20 to 30 trades in a year, kind of on a handful of different asset classes, but I'm definitely not in and out of the markets by any stretch of the imagination. And really what I'm looking for is kind of the highest probability plays, the best plays, and just try and run with them. And if it turns out to to be a good one, hopefully it lasts 6 months or more. That's kind of what I'm targeting. So. Let's see, if you do check that post out, just to add some context, I've been long the S&P since December 26th, and I've been adding to that. I think I did put on a hedge early March for about a month. I was long S&P, short Euro zone, or I think it was actually short developing market ETF. When we were seeing some weakness. And then the other thing you'll see too in the post is I cut my dollar exposure. I'm short the euro. I cut that position in half as well yesterday. You can see the reasoning for that on there. But I've been long the dollar since I believe last April or May is when I started building out that position. I think I've been pretty long the entire time. I know for a little while we were long gold, or at least I was long gold at that same or during that time period for kind of a little bit of a hedge. But I've been a big dollar bull for quite some time. But I did cut that in half yesterday, as I mentioned. And the reason I post my trades is not so much so anyone can say copy me exactly for what I'm doing. Everyone's objective is going to be the same. I mean, we're going to be in different circumstances, but I really think what it does is it helps demonstrate where my conviction levels are. It helps kind of bring full circle kind of what my arguments are as I'm making them in my updates, whether it's the Elliott Wave update, the chart updates, or those macro updates. And and I try and keep it pretty simple. At any given time, I'm only going to be in 2, 3, 4, maybe 5 positions at a time, because that really just kind of fits the system that I have, and it works out pretty nicely that way. Anyways, enough about that. What I really want to discuss in this video is some of the base reasons why I'm still bullish on this market, and it really boils down to how I understand kind of what the modern monetary system is, and how I understand how money is created, what money is. And see, if you understand fiscal flows, and I know I've talked about this a lot, but it's so important, and so many people continue to get it wrong. If you understand fiscal flows, if you understand how deficits, or how I should say how the deficit is actually how it functions and how it impacts the economy, you know that the deficit is really new money coming into the economy. And that money coming into the economy, when it gets entered into the economy, again through government spending, it only has 2 paths, right? Once it reaches, whether it's you, whether it's anyone, whether it's a company, whoever receives that money can either be spent or it can be saved. And both of those paths are going to benefit stocks. If you spend money, that's going to prop up profits and obviously be beneficial for the company that's increasing profits. And if you save money, well, most of that's going to go in like a 401k or a pension or something like that, and most of it's going to end up in stocks. So new money going into the economy is going to benefit stocks. It's just the nature of how money flows through the economy. And since the money coming in is public spending, that money never has to be repaid. Public spending becomes public savings. It's the nature of accounting. So it's pretty simple. I mean, that's kind of what it is. And you get so many traders, so many investors, they just for whatever reason can't accept this fact. I don't think it's too hard to understand the math behind it. The balance sheet operations behind it are not terribly difficult at a really kind of basic level. But most of the people I follow on Twitter and in the financial media, I mean, they're ringing alarm bells over this stuff, and usually they're kind of the more sound money type, and they see everything as some sort of Fed-induced bubble. These bubble people, and I try and engage with kind of the other side for two reasons. One, there are very few, if any, that are doing exactly what I'm doing, which is kind of applying like a modern money approach to kind of a macro view, and then overlaying that with Elliott Wave. I kind of like to call it weaponizing MMT for traders and investors. And two, it's always good, obviously, just to kind of really test your arguments, see the best arguments from the other side, and try and sharpen your view. But I mean, the great irony that I'm seeing is so many of the contrarian investors of yesterday, right, pre 2008, that really understood that really understood that 2008 was going to happen. They've now really become the herd. Like in 2011, this is it, right? We're here's the second wave down, and it's all it's 2008, 2009 all over again, and then that never happened, and it was the Fed bubble. And then in 2015, it was okay, the Fed's finally run out of options, the bubble's going to burst. And then nothing happened. I mean, obviously we had some sell-offs, but the market reset and pushed higher. And then 2008, I mean, exact same thing. The bubble's bursting, this is it. And here we are, a couple percent from all-time high, and as I see it, we're likely going to reach that point again. And I think their big fatal flaw, kind of the old contrarian crowd, which is now the kind of herd crowd, is what it boils down to is they conflate private debt and public debt. And private debt and public debt operate really in separate, opposite ways. One has to be paid back, the other doesn't. One creates bubbles, that would be the private debt, definitely drives bubbles, and it's scary. I mean, it is a big risk that we have a huge private debt load in the U.S., and but at the end of the day, we also have a massive public debt that continues to be building, and I've developed ways to really track this stuff in real times, and it's paid off, and it works. So look though, and one thing too, as I kind of finish out, I do want to be fair. Are markets historically overvalued? Yes, I mean that's an argument I see, and they absolutely are. And are we likely near an end of a cycle? Yeah, I think there are a lot of data points pointing to kind of think that to come to that conclusion, and I don't think we're too far away from seeing some real weakness enter in the markets. And as I've talked about before on this channel, there are some major issues in Europe, emerging markets, mostly due to kind of that massive dollar shortage and the euro dollar system breaking down. And one day, likely sooner than later, that is going to cause some big issues. But the most important data points at kind of the core of what drives the equity markets, equity prices, and they continue to be strong enough to at least not think that any big selling is around the corner. Anyway, I really think at the end of the day, the Bears are going to be disappointed one more time here. So, all right, that's going to wrap up kind of what I have for tonight. So, as always, patreon.com/CannonMA. That's where you can find all my charts, all my macro updates, and all my trades. And if you like what I'm doing here, make sure you subscribe, hit the like button, and click that notification bell. It always helps as well. So, anyway, I'll wrap it up there. Yeah, good trading, everyone, and we'll see you next time. Bye-bye.